Cass, I think your description of like trying to explain the complexity of like insured cash sweeps in this system as a whole was striking, because I was reading a story recently, and I'm going to pronounce his name wrong, but Giannis Antetokounmpo, the basketball player from Greece, when he originally came over into the NBA, he set up like by himself 40 to 50 different bank accounts and had like his first couple years contracts being deposited to each one. And eventually the coach like set him up with a wealth manager who was then able to explain that you can get like a single bank account that'll sweep and do this same thing.
Nice.
Because he had the cultural experience of the Greece bail-ins earlier, he had this understanding, at least at some level, that deposit insurance does have a cap and you can avoid it by distributing it. But his coach was talking about how it ended up becoming like a compliance nightmare, because every like month they had to switch over and send his payment for that month to a different account, and he had 50 different bank accounts he was managing and stuff like that, all because it is possible to get this effectively unlimited insurance if you're willing to jump through this set of prescribed hoops. But there are these hoops and steps that make it more complicated.
And the risk, just to bear in mind here, the risk that he's accounting for is something that happens so rarely. We're talking about once every decade or two. Like, the risk is below 1% that this is going to happen on any given day, right? And yet, you have to, this is something you genuinely should consider, because here we are. This is the third time that I've been alive that this is happening. And it's just like, God, this is insane. Like, this is not operable the way that we're doing it right now.
And we do bail out half of these guys, or we put them in receivership and sell the deposits. So even if you are holding uninsured deposits, the chances that you will actually lose are relatively slim. You know, there have been a lot of bank failures over the last couple of decades. The number in which uninsured depositors have lost serious amounts of money is very, very small, close to nil, right? So we are not actually even keeping this discipline serving the disciplinary function. If the whole point of this is that uninsured depositors are supposed to be a layer of oversight on bank behavior, I mean, are we really offshoring bank supervision to the Silicon Valley tech bros? Like, that's the way that we're trying to keep discipline on the banking system, is to hand it over to those people. Like, what we saw with the Silicon Valley Bank as well, as far as I understand, is that the bank was offering products to the CEOs and the founders of these companies to keep their money there, right? You get a private wealth manager, you get a personal mortgage loan, you get a personal checking account with nice perks, and we'll give you favorable loans to your entity as long as you keep your deposits with us, so that we can limit our liquidity outflow from any loans that we make. Well, again, like, what? Yes, of course, you put a bunch of Silicon Valley guys in a room with a bunch of bankers and they'll work out some creative way to make themselves both rich at everyone else's expense. Why are we trusting them? Why are we assuming this is the best way to design a banking system? Oh, that's how we've always done it. Okay.
I love that they built into their banking structure this like brinksmanship, where like in order for these startups to get these loans extended to them from Silicon Valley Bank, they had to keep their deposits there. And then all these people, when the bank run started, had to decide in their very disciplined positions whether they wanted to pay back their entire credit line and try to remove their deposits, or hope that like if they could keep their deposits there, keep their credit line open and continue functioning. They were like, both of these entities, the bank and the attempted alignment, eventually reached a point where when it potentially broke, when they broke from alignment, it caused these like cascading effects for all these depositors at Silicon Valley Bank.
It's a pox on all their houses, frankly. And, you know, the fact that the regulators set it up this way, I want them to bear some of the pain here. People saying, oh, we want to make sure that it's the Silicon Valley investors that pay the cost of this. We want to make sure the bank shareholders. Yes, but also, if the regulators don't get embarrassed by this, they won't change anything, right?